Hello, I'm back. Don't know what happened there at all. Literally everything locked up. The whole PC, literally nothing worked. I just had to turn it off at the mains. Weird. So yeah, sorry about that. I'm back. I've no idea where I got to at all. So I'm just going to start again. Morning, everybody. Is there anybody in here? 14. Let's wait for some people to come in. I have put a post out, but we'll have to wait for them to catch up. Technology, hey? Don't know what happened there. That was weird. So I've missed the opening range breakout this morning. Yeah, missed it. Because it all locked up. So it looks like pre-market would have gone long. Post-market, you've gone short. So you're hedged if you went pre-market. But that's annoying. Right, let me just get my pen back. Right. There we go. Okay. Am I planning to make a video about your knowledge and point of view about fundamental analysis? No. Because I cover it every day in here. So I'm not going to do a video on it. If you want to do a full course on fundamentals, there's plenty of them out there. Well, there's not actually that many out there, but you just have to go and learn it. But it's all on the website. If you want to learn about fundamentals, everything you need to know about fundamentals is on here. Yeah. So if you go and look at the directional bias scorecard, it gives you all the information about what all these are. And if you look at the key fundamentals page, it's kind of there as well. But all you need to really know is interest rates going up is positive, inflation going up is positive, GDP going up is positive, unemployment going up is negative. Pretty much it. In a nutshell. Right. So where was I before I got so rudely interrupted by the interweb? Getting on with the calendar, financial juice. So basically, I was just going through the news. I'm not going to go through it all. It's all there. You know where it all is. There's all the news. There's lots of it. So basically, every day this week, we've got a major news event coming out. Yeah. So it's either going to be something to do with CPI, something to do with GDP, or a combination of the two, unemployment. So every day this week, we've got some kind of news which is volatile. All the news this week is focused around the Canadian dollar and the pound and the US dollar, most of it. But we've got two major Aussie news releases in there as well. So there's just a real varied mix all week this week. Overnight news and over weekend news. Obviously, everything's been revolving around the state of play in Israel. This is all obviously unstable for every currency. So there's lots of talk all over the place about what's going on, who's doing what, who's getting cross with who, etc., etc. The main thing that will affect all currencies will be to do with oil flow. So if there is any interruption to either production or delivery of oil, that has a knock-on effect on every single currency, in the fact that it will create inflationary issues, because one of the largest outgoings for every country and every individual that lives in every country is energy. Yeah, you have to pay for electricity and gas, and if the price of that goes up, everybody suffers, which causes inflation, etc., etc. So that's the main thing we need to be watching for. Any kind of Saudi Arabia going, if Israel invade, we're going to stop supplying, or something stupid like that. Yeah. So that's basically what I'm looking for on here. Or any other countries getting involved in this conflict. So if all of a sudden Iran decide to invade Israel, US will have to fight back on Israel's behalf, as will the UK. That is all going to cause the stock markets to absolutely collapse. Yeah. So it's very, very volatile at the moment. I didn't get onto this bit because I was just covering the main news when the stream disappeared. But You just want to be watching for anything that could potentially destabilize all currencies, basically. There's no other news really that's come out that isn't related to that. There's no other news from from Japan. So we've been watching the US dollar yen for any kind of push past this 150 level. At the moment, we are sitting comfortably within the propulsion gap, within the intervention move. So we've tested it. We are now sitting in it, and they pushed back on Friday. So we'll see where this one goes today. If we get another rally on the US today, that's going to take it above that 150 level. That means the Japanese are going to start getting cross, and we might see that intervention come back through again. So just be a little careful with this as well. Do not long anything against the yen, basically. So we'll have a look through that. Opening range breakout, obviously, is to say I haven't taken it this morning because it all went wrong. So interweb crashing. So there's your 5-minute opening range. You're short if you've taken the 5-minute break. You're probably hedged if you took the pre-market. I don't even know what the size of the pre-market was. 221. I wouldn't have got on it anyway. So the pre-market was too small today. The pre-market was only 200. So that wouldn't have been taken today. Hang on. No, it's 216. So it's too small. So the pre-market range today wouldn't have been taken by the stock index hedge EA if you're using that. It would have taken the 5-minute post. That wouldn't have got me in because of the offset. So I would be short right now. So watch the gap fill, the targets, the areas that I said about this morning, watch those to the downside. So we're watching for the gap fill. We're watching for yesterday's low. And then after that, we're watching for last week's low, which is there. Yeah, which is the Monday low, basically. So downside, yesterday's low. You should be able to get 2R out of that. Easy, I think. Oh, it's horrible not having the EA running. I don't need to measure stuff and everything. So yeah, 2R. So if you get a yesterday's low hit today, that's your 2R target to the downside. So that would have been a lovely profit this morning. Technology. Is everybody still here? Because chat has gone dead quiet. No one's talking. Always worries me when no one's talking in chat because I'm thinking, am I just talking to myself? Let me know if I am actually on air because I'm not sure now. It is saying I am. Harold. Oh, yeah, Peter's here. Good. Right, okay. So we are still here. Good. Right. Okay. You're all here. I know. You don't have to say yes now. Hello, everybody. Right. So it's really thrown me this morning. I'm completely confused as to where I'm going now. ADRs. We got 2 ADRs. Let's start off with the ADRs. I really need to go through my positions as well and get some profit banked. Let's start off with oil first because that's going to affect the CAD and the US. So oil last week had a couple of longs on. So first trade was taken there. So we gapped up. And I basically said, right, okay, I'm just going to dive into a long in case it's a gap and go because this is when obviously the conflict kicked off and oil prices tend to rise during conflict. So took the first long there and I said if we came down to this gap fill, which was the second option, I would add a second position, which I did. I took that one off the next day because it was a nice profit, came back down again, added it back on, took it back off again on Friday. And then I had another order to add when we broke this high here, which we did on Friday. So I'm in 2 positions now, 2 banked, 2 positions on, looking for this now to carry on and rally up to the previous highs. So oil prices are forecast to hit $100 a barrel this year anyway. So that is Goldman's forecast and a couple of the other big institutions. So we're looking at $100 a barrel as our upside target by Christmas anyway. Now we've had this kickoff in Israel. As I said, there's a potential for there to be much larger movement. So that is when the Ukraine war kicked off there. Yeah. So that's the sort of thing you would look at if there is a supply-demand disruption in oil. so that, as I said, if that happens, we'll be looking at 100, 125 a barrel within weeks. Yeah. So this doesn't take long to get there. It's a week or so. It's just constant upwards ticks in price of oil. So at the moment, obviously, we haven't got any of that. However, war is good for oil pricing because there is a much bigger demand. The supply doesn't change. In fact, supply quite often will get contracted, which means we absolutely just fly it a lot of the time. Doesn't always happen, but typically, historically, that's what we seem to find. So I've got an initial target up there in that propulsion gap for the lowest position. And I've got a buy limit, I just realized, down there as well, which I'm just going to move up in case we come back and retest. Actually, no, I'm not going to get rid of that oil. That's second buy limit. Don't need that. So yeah, so this position here basically is TPing there. This position is just running. I will see what's going on when we get some movement and decide what I want to do with these basically as and when. So, but yeah, really nice move on oil on Friday. I think this was 150 ADR on Friday, 51. Yeah, about 175 ADR move to the upside on Friday on oil. So really big move. So that should push the Canadian dollar. Unfortunately, it will also try to push the US dollar as well. So when we're looking at anything this week from a news perspective, like the CPI from the CAD, the Canadian dollar should be strong anyway off the back of oil prices increasing or forecast to increase. If that CPI figure comes out higher than expected, that will put inflationary pressure on interest rates, which will again make it more bullish. So we've got potential for that to move quite a lot, the Canadian dollar this week, depending on what the figure comes out as. So that's oil. I've got some I can bank on that, which I'm tempted to do with this oil trade. Because I don't normally trade it and I don't normally position trade it. As you can see, I've been getting in and out because what I'm worried about is some catastrophic drop on it for some reason. So what I'm basically doing is just grabbing 0.5% every time we get it or so, and then adding positions back on, exactly the same as I did here. So this position that I've got on at the moment, if we get a rally up towards ADR today, that will come off up here somewhere probably, although I'm targeting up there, just to keep the profit rolling in the bank. And obviously every time it comes back down again, I can add it back on again. So just keep milking it as we go, basically. But I'll keep that running for the minute. ADRs today, we've got Aussie New Zealand. Let me just quickly see what the DAX is doing. So we're on our way, gap fill complete, pretty much, near as damn it, gap fill done. So just watch for a bounce here. Now we've got that completed. I suspect we'll probably come and retest Friday's low, but we'll see. We are running into some buyers in this level, so just watch it. But your breaks there, so you're probably sitting you're sitting 1 hour on it at the moment. Should get down there. So ADRs today, we've got Aussie New Zealand so far. So that's an ADR hit to the upside. That's a big old gap down, isn't it? Wow. So that's gap down in ADR. That's obviously New Zealand that's gapped then, isn't it? That's a big gap. So I would say that's probably not an ADR, that Aussie New Zealand. I'm not sure. I haven't got another broker open. I'm not sure if that's my broker or that is just a big gap down, but that's a big gap. That's an ADR that's dropped and it's filled the gap. So I would kind of ignore that one. I'm not quite sure if that is actually a move or not. So for safety's sake, just leave it. Pound Swiss. So that is an ADR hit to the upside so far today. Pound basically this morning, little bit flippy floppy. The Swiss franc we've had lots and lots of movement on. Just put TP on that one. The Swiss franc we had a big move on Friday. As you can see, everything came down hard against the Swiss franc. Swiss franc is one of the safe haven currencies. So when you get times of trouble, people pull money out of all currencies and put it into places like the Swiss franc. It's usually a very, very safe place to put your money, unless Russia and the UN situation all kicks off. Then you don't want it in the Swissy anymore. Where the hell we put it then, I don't know, because Japan's stuffed. But anyway, Swiss franc, big strong move there. I think what this was on Friday was potentially a run for the safe havens, just in case something big kicked off over the weekend. It hasn't. Israel haven't even gone into Gaza yet, although that's probably the plan today. So there's a good chance that we might undo this Swiss franc movement. So it's kind of, think about it like, I'm not sure if I'm going to get robbed this weekend. So what I'll do is I'll take all the money from my house and put it in the bank. Monday morning, you wake up, haven't been robbed. I'll go and get my money back out the bank, put it back into my house. Yeah. So that's the way to sort of look at the Swiss franc. You store stuff there. When you don't store it there anymore, you take it back out again. V-shaped recovery. Yeah. So we could well see a complete upshift back the opposite direction on the Swiss franc today. So see what happens. Obviously, London's just opened, so we'll see. But pound Swiss, that is an ADR hit to the upside. Obviously, there is a short opportunity there, but there's a very good chance we might be back up there this afternoon as well. So tricky one to take, I think. News-wise today, we've only got Empire State Manufacturing this afternoon. So none of this stuff. We got Harker speaking, so there's talking heads and things, but that's really the only news we've got this afternoon, which isn't particularly impactful. So I would say there's a good chance that price might just rally away today. So we'll see what happens. But so those are your ADRs. RSIs are flat on the hourly. There's nothing to look at there at all. As you can see from my P&L, there's a lot of risk on at the moment, basically, because we had a lot of RSI hits on Friday. And obviously, a lot of those RSI hits are starting to play out, which is why we've got a load of green on the P&L. So there's not a lot to look at from the RSI perspective, because what we did have extended last week has become unextended. But we have got a few on the fours. So we'll look at those. Aussie dollar Swiss. Let's quickly see what the DAX is up to. Okay, still going on the DAX. So this area down here, just watch this area for potential bounce. Come out a little bit. So that is the actual low. Yeah. But obviously, price doesn't necessarily hit that low. It's an area. So they will start buying up around this area. Yeah, you can see what happened here. When we got down to that low, we had a big propulsion move, and they defended that propulsion move at the end of the session. So just watch this propulsion gap. If you are short on this and you're sitting in 1.5 R here, for the sake of actually hitting that 2R and actually taking the profit off, up to you. But don't protect it. Either take it or don't take it. Don't stick a break even on it, because all you're going to get is a break even then. So if you do want to take it, but watch price action. We've got no reason whatsoever at the moment to stop this position. Yeah. With 3 minutes left on this candle, we're painting an inside bar at the moment. But if this ends up as another down candle, then you get another down candle. There's no green candles there. There's nothing telling you need to buy this, get out of the position short at the moment. So stay in it at the minute. But if we start seeing a green candle and inside bars coming in, as let's say that is how it paints, that is the sign that the sellers are starting to run out of ammunition. And obviously this is where the buyers started to take control on Friday. Although this is end of Friday session. So to be honest, this is probably just algorithmic crap, which doesn't mean anything. But see where we go. Aussie dollar Swiss. Annoyed I missed that this morning, but never mind. Aussie Swiss. Yeah, so basically this one is an RSI extension on the 4 hour. To the downside, it's just coming out of extension now. So as you can see, that was the extension on Friday. We're pushing up. We could well pull into that accumulation and drop back down again. But obviously with the Swiss franc, this run that we're seeing is this whole run here is basically caused by what's going on at the moment in Israel. If this ground assault goes ahead as planned, and there's no need for anything else to happen, no need for the US to get involved, the Iran government decide, no, we're not going to get involved, everything is just between the two parties involved in it, this will probably just all flicker out back up to where we were this week. So good looking long, potentially to hold it. I'm long on this with 3 positions at the moment anyway. But as you can see, I'm targeting back up in that accumulation. But if we do get up to somewhere around here, I should probably take it off. Euro Swiss, same thing. Yeah, all Swiss franc. In fact, the whole thing is Swissy, isn't it? Look, Aussie Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss. It's all Swiss franc based on the moves that we had last week. So all 4-hour extensions. However, obviously, if it does all start to kick off, probably going down further. So just be careful with your exposure on the Swiss franc. So Pound Swiss, again, nice extension, all starting to pull back up. Target wise, looking for a V-shaped recovery. Yeah. So with Swiss franc moves, if it's a legitimate move, it will just continue market structure and you'll get a sell rally start somewhere in there. If it's not a legitimate move, you're looking at a V-shaped recovery. You don't know which it's going to be. So you either need to hold it or you need to get out whenever you want to get out. Just approaching break even on New Zealand dollar Swiss. Well, that could go anywhere, couldn't it? I mean, it's impossible to pick any support and resistance apart from that, which is 200 ADR. So that's it, basically. It's not going to get there. I'm going to target somewhere around there, basically. I've only got the 2 on that, haven't I? Yeah. Somewhere in the middle of that. So look for 50% retracement, basically. Right, there we go. So that's all we've got on RSIs. That's all we've got on ADRs. There's some rejection showing on the DAX. May not be a rejection, but we're certainly, buyers are certainly starting to step back in now. So we could be looking at just a pullback drop. This could basically be them buying up these lows out of that particular order. So that's a buy order, basically. Yeah. These are additional positions added to it. That's another addition. So up to you if you want to get out and take what you got. Looks like you're going to have to be pretty quick. And if there's any news coming out causing this, but it's not. It's price action. Right, there we go. It's all good information or too good to say anything? All right, okay. Did you see Quant Data Manager for backtest? Do I use Quant Data Manager for backtesting? No. Morning, Alan. Zhao is out. Could be better. Could be worse. This might just be a pullback, though. So just watch this propulsion move at the... This was the initial order today. So why is... Oh, yeah, because nothing... Got no lines on anything because obviously all my charts were shot when the open happened. So that's your 5-minute open there. So that's the initial cash balance. This is the break of that. So basically, obviously, this is the initial speculative order that came through this morning. We then added back into that. So now we're basically looking for this to hold if the sellers are going to remain in control today, basically. So it may well just be a pullback and then test that low. So there is obviously more downside because the sellers are by far in control of the market at the moment, aren't they? But it's always going to turn at some point. If only we knew. Right, let me just have a quick look at my positions. So Aussie dollar CAD. I didn't get a chance to look at anything this morning. So Aussie dollar CAD, first entry on Thursday last week. There, target in propulsion. Nothing's changed on that one. Why didn't I get a second position on that? 67. Wow, that was just too close by literally pips. That reversal alert there to my initial position. 42 Minimum distance is 3/4 of an ADR. 50. So that a reversal there to there is 42 pips. I need 50 pips between positions, so it didn't take it, which is annoying because I would be out of that now, but that's the way it is. Yeah, looking for a push up into propulsion on this still. Lots of Aussie and New Zealand news this week, so lots of potential movement on this one. So just in that with one position at the moment. Aussie dollar Swiss, 3 on that, 4 on that, sorry. Targeting that propulsion gap, just moving targets down on this to there. That's all of them. So initial target was up there. We've pushed down a lot further now because of the Swiss franc move. So adjusting targets down there, which is basically below this area here. Yeah, so we pushed down into that area, we gapped down into it, we bought it, we came down, we bought it, we got stuck there, couldn't get through it, and then finally got through that level. So that is your support. That will be if we're going to continue in a downtrend where we should turn into resistance. So I'm targeting below that wick, which is a couple of hundred ADR. So it's going to take 2 or 3 days to get there. In fact, it will get there on a news event. Obviously, we've got Aussie and New Zealand news this week. Overnight. So if that New Zealand CPI comes out above 1.9, 1.9, that's a hell of a forecast. They're expecting inflation to go up by 1.9%. Bloody hell. Okay. Yeah, well, that should be bullish for the New Zealand dollar, regardless. If they get the forecast, it should be bullish. That's huge. So yeah, if quarterly CPI figure does go to 1.9, that's going to put pressure on the New Zealand government to increase the interest rates. If it comes out above 1.9, it's going to put super pressure. I don't like that. That's a really tricky one, this one on overnight, because there's a big variance there. That's almost a % variance. Yeah, so when you're looking at the differentials you get when you get a forecast on something. So if you've got something that's forecast at 1.1 there, for example, last time was 1.1, they're forecasting it to go to something like 1.3. If that comes out at a 1.2, it's halfway between the two. So it's pretty much the same as last time. It's almost what the forecast was, but it's not far away. So the market will look at that and go, well, it's roughly about what we're expecting. And there won't be an awful lot of movement. When you've got something that was previously 1.1 and it's forecast to go to 1.9, we've got a 0.8 variance there. Yeah. So there's 8 levels of reaction the banks could have within those two. So if it comes out at a 1.5, the banks could look at that and go, wow, that's a lot worse than we were expecting. And it's a big knee-jerk reaction. If it comes out at 1.9, it's as expected. If you come out at something like 2.2, that's like, holy crap, that's really, 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 really bad. And all of a sudden, you'll see a massive spike in the New Zealand dollar. So there's an awful lot of variance in there, which means basically last time they got it really, really wrong. If they're forecasting it to come out that far away from where it was last time, it's like, the oscillators going like that. You were forecasting somewhere in here. That's too big a target. Yeah, you need to be looking, we're looking up here, we're looking down here. We're not looking somewhere in the middle. So that could be quite a big one overnight. So just be careful with your Aussie and New Zealand positions. If you've got things long, like I have on the Aussie and the New Zealand, obviously that's quite a lot of exposure to have on that. So, but equally, everything could hit target tomorrow by the time I wake up. So just be a little careful. If you've got stuff like that at the end of the day, stick it down there because you won't get it back, but you can add it back on again. Yeah, if that suddenly turns into a negative because you're the wrong side of the news, you can add that position back again and make 0.5%. Yeah, so just bear in mind. But yeah, so I'm long on that one. Target underneath support. Aussie dollar, US dollar, one long, targeting, this move here. Again, Aussie dollar exposure. Loads of US movement this week, so we could have loads of negative US move, which means it will fly. CAD Swiss, got 3 on this. Yeah. Just going to stay targeted in that propulsion at the moment. Obviously, oil will rally the Canadian dollar. We've got Canadian dollar news this week, and we're expecting them to potentially pile out the Swiss franc after the move on Friday. So positive oil movement today, coupled with negative Swiss movement, part of that V-shaped recovery, means that we could have a good ADR hit on this today. So if we can get up to there today, I'll probably take that one off and bank it. We'll see where that one gets to. Euro odd. Just got the one short. It's fine. We are buying up out of this propulsion area. Look. So that's not really a propulsion. It's part of a big, strong, obviously, move there. So this, you could kind of class this whole thing, this whole move as a propulsion move, really. But we broke that high, and that seems to be what they're buying up. Look. Yep. So they're buying this area. So we've broken through it. They're buying it. They're buying it. They're buying it. So this could well continue to move up. Obviously, Australian dollar, we've got news coming out. Euro New Zealand. So just got the one on that short in a minute. Euro New Zealand, just got the one short on that one as well. Looking for pushed back down into propulsion. That's a 50% retracement on that move. Pound odd. That's in profit. Again, they're buying previous resistance here. So that might well push. Pound CAD. That one's going the right way. Wow, really strong pound this morning. Really strong pound. I was going to say, if that's beating the Canadian dollar, we've got a really big rally on our hands with the pound today, for some reason. Buying into the claimant count change tomorrow, potentially. Don't know. Good move, though. So, again, just got one on this. Target is there. It's not a lot of profit. Pound CAD. Pound New Zealand. That very close to TP. Look, very annoying. So, massive gap down there on that Pound New Zealand. That's ridiculous. Look at that. 141 pips. That's an ADR again. Pound New Zealand ADR gap down. It's pretty much filled that gap. So looking for TP there. Not even sure I would have got that off. The spread on that when it got down to there was probably something stupid like that. So you wouldn't have actually got an exit on it anyway. But that's really annoying that that's gapped down now. Got a lot of New Zealand exposure on. I might just bank that one. I'm just going to take that one off. Just to reduce exposure a little bit. This pound is rallying hard. So I'm just going to grab that one and just stick something in the bank this morning. Pound US. So yeah, pound US obviously is the one we know has been in forever. This is a critical point here. So we had our attempted market structure reversal, which failed. We came down and put that new low in, and then we rallied for 2 weeks and we broke that high. So the structure break is now in. We've broken structure back to the upside. So this is potentially a trend reversal. So what we need now is a higher low. So if we're going to continue market structure to the upside, there's your low, there's your high. This has got to be your higher low. And now we're going to rally up onto that propulsion gap, which is where my target is. So that's what I'm looking for this week. There's two things that need to make that happen. One, US dollar has to have negative news. Pound has to have positive news. We've got lots and lots of news coming out for both of these this week. So I want to see decent claimant count news. I want to see bad retail for the US. I want to see higher than expected inflation. I don't really, but I do want to see higher. For me personally, spending money in the UK, I don't want to see that, but for me right now, just to get out of pound US dollar, I'll take it for a month. That going up. Unemployment claims going up for the US, which means the US will come down. Powell going, holy crap, we are absolutely spot on. We need to drop our interest rates. Go on, Powell. So basically, we're just looking for negative news US and positive news for the pound, basically. Still in that. Still holding. Still waiting. New Zealand dollar CAD. Got two on that as a buy. A minute. So target I can move down now into propulsion. Why can't I grab it? So got two positions on that. So just adjusting target to closest propulsion gap. New Zealand dollar Swiss. Again, news this week on all these. There's that Swissy retracement going in. Look. So target on that one. Happy there. Be nice if we can get out of that today, but that area there is kind of point of no return, and then we've got this little area here which they gapped down into, which is where we bought there, gap down, bought again. So this area here is a strong area for the buyers. We did have a little price discovery which failed down below that level, so you're watching that level, which is 200 ADR, and then you're watching somewhere around 250 ADR there. Potential resistance. New Zealand US. One long looking for a propulsion gap fill. And US dollar yen. And oil we know about. So yeah, US dollar yen. Watching this like a hawk. If you look at all the other yen pairs after the intervention, which was here. Yeah. They've all retraced very, very quickly, and some of them have managed to push even further. Yeah. So Swiss yen intervention, ignored it, off we go. Euro yen, ignored it, off we go. Pound yen, ignored it, off we go. New Zealand yen, same thing. US yen, scared to death. Yeah. If they push this above this level, they know what's coming. So they are holding the US dollar yen. Yeah. This was the whole intention of that intervention move by the Japanese, and it always is to control the exchange rate between their major export partner, which is the US. So it's holding at the moment. Obviously, if we have upside pressure on the US dollar this week, loads of positive news, and people just start buying the US dollar, bear in mind, they are not buying the US dollar because of any other reason than they want to be buying the US dollar. Whereas anybody that's watching the US dollar yen is thinking, please don't buy the US dollar because it's going to make the Japanese intervene again. So watching this very closely this week, hopefully we get negative news and this move just plays out normally. If it doesn't, obviously we're going to be looking for an intervention, which means I'm going to draw down. I'm happy to hold this US dollar yen. I'd be happy to hold it up to 3, 4, 5%, because when it comes, it will come. We've seen it come. Yeah, we saw it last 2 weeks ago, didn't we? Yeah, it's coming again if they do that again. So I don't have a problem holding this short, and I'm happy to sit and draw down on it as long as it takes, because it will happen, always does. And the other thing, we may have obviously a lot of US dollar weakness coming from Powell this week. So we've got him talking on is it Thursday. We haven't heard anything for a good week or so. So there's potential for them to start, now they've got more data, to start sort of looking at what they're potentially going to do with interest rates moving into next year. We're getting towards the end of the year now. They'll be looking at where we're going to be going next year. They keep giving us forecasts and dot plots as to what they're going to do with it, but Powell hasn't really come out and said anything concrete in any shape or form. So we know that someone has got to go first. Yeah, these interest rates are at terminal rates. We know we're hitting terminals because they're all zeros. Yeah, so you push your interest rates, and then you don't push your interest rates anymore. You see what impact they've had on inflation, and there's nowhere else to go but that way. Every time you do that, that devalues your currency. So someone's got to go first. One of these is going to go negative 0.25 at some point. We're waiting to find out who is going to say first that yeah, we might do it. As soon as we do, we'll start to unravel. So someone's got to do it, which is why it's important to pay attention to talking heads, because they are the ones that give the clues first. So DAX, you've hit target to the downside. So there's yesterday's low gone. So that's 2R. If you took the 5-minute break today, well done. I would be in that. The internet didn't break. Like in the hoodie, yeah, this is my winter wardrobe. So I can look like a hoodlum. Let's get the bling on. There we go. So there you go. Mamba FX. Eat your heart out. Oh, it's ruined my hair. I spend hours on my hair in the mornings. Like literally, I don't know. How long does it take to do that with a towel? As long as it takes. Oryx, SIHEA opened up 2 positions each. Opened up 2 positions buy and got hedged, and it opened 2 positions sell. Any leads? I already had a manual position open. Any leads? That's exactly what it should do. That's its job. But you must be getting crucified on swaps on the US dollar yen. Yeah. It'll pay for itself. 125 ADR on pound Swiss. So pound obviously rallying hard today. Swiss franc looks like it's given up the ghost, which is good. So we're getting the V-shaped recovery starting on all these pound Swisses. In fact, that one's nearly done. But yeah, US dollar yen swaps are heavy, which is why you're looking at that. So if you look at where I am on this US dollar yen in relation to my average, it's down here. When I get down to there, it will still be saying something like negative $500 because of the swaps. So when I say I will hold it as long as I need to, it's one of those painful holds, but there's nothing you can do about it with this one. I should have got out of it last week because, you know, whenever you take a trade, there's always a trade idea. Yeah, so you've got to have a trade idea. You've got to have if you're going to hit the buy and the sell button on any instrument, as soon as you hit the buy and the sell button, the first thing, or before you even hit the buy and the sell button, you should be going, right, I'm going to get in here. What I'm anticipating happening is this. If that doesn't happen, what I'm anticipating happening is this. Yeah. If you've sat in this trade for 4 or 5 days and neither of those outcomes has happened, that trade idea is invalid. It's gone. Yeah. What you were expecting to happen didn't happen. So get out. I didn't do that last week. I should have done. I had an opportunity to get out of this 1, 2, 3, 4 times. I didn't take it. Should have done. Because that trade idea was invalid. The trade idea was this intervention goes in, they pull back on the intervention and they push back down to test that low. We either then go into an accumulation for a week or so and the market will move, or it will rally back up and then we will get the second intervention. Neither of those things has happened now, has it? So I should be out, but I missed my exits. So I can take this 0.75 loss. It's actually 1.2. But I can take that loss or not. I don't know. Just stuck at the minute. So, have you got your do not trade hours on the EA off? Yes, I don't use. Yeah, I don't use it personally. Lippy, question. Do you run all 28 pairs with the ADR reversal and another MT4, 28 pairs with mean reversion? No, you should run, if you're going to run 2 strategies, you should run them on separate MT4s, separate accounts. Because you're going to get the same pair, you're going to get the same trades taken on those 2 strategies, yeah? So ADR, when you hit ADR, if you look at the pound New Zealand today, not the pound New Zealand. What have we had? Pound Swiss. Yeah. So look, you've hit ADR there on Friday. What did you also hit? H1 RSI. So if you're trading H1 M5 mean reversion and you're trading ADR reversals on Friday, you would have entered twice, once on the ADR strategy, once on the RSI strategy. So just trade one or the other. Pick a strategy. I haven't clarified this enough in the bootcamp. I should have done. I probably did. I don't know. I haven't watched the bootcamp for a long time. But in the strategies, the idea of giving multiple strategies here is so that people can see different ways to position trade. Yeah, it's these are the strategies that I use and I came up with that work. But you could use anything. This is a methodology. The way of position trading is a way to scale in and out of the market with market movement. You can use any instrument under the sun that is mean reversion based, like a Bollinger Band, for example, a stochastic, a CCI, a MACD, an RSI. You can use anything you like. As long as there's a condition indicator that shows you price movement in excess, you can use it. So the idea of position trading is you trade a portfolio of currency, without a stop. So you're in and out of the swings. The intention wasn't to give you 4 strategies and trade them all. The intention was to give you 4 ways to trade position trading. Yeah. If you run all of them on 4 different accounts, of course, you could massively exponentially increase your profit. You could also massively exponentially increase your losses. If you have a big month where there's a horrible squeeze on 3 different currencies and you're trading all of them across 3 accounts, your exposure is 3 times higher. Yeah. I trade H1M5. I don't trade the others because I trade H1M5. I have the others running on a VPS so that I know what's going on with them, but I'm not, I'm trading one strategy. It's position trading. I'm position trading. How I get in and how I get out is irrelevant. It's a method. It's a way of trading. Yeah. But you can trade them all, but separate them. You've got to segregate them, because you're going to get the same trade. H4 as well, look. What have I got a few on? US dollar, no. Aussie Swiss, right? So let's use this as an example. So Aussie dollar Swiss, on Thursday last week. Down here. You had an ADR hit. It hit ADR. So you had an ADR reversal entry. You also had an H1 RSI entry. But if you go up to the 4-hour, you also had an H4 RSI entry below the 25 level there. Yeah. So H4 M15 mean reversion, H1 M5 mean reversion, ADR reversal strategy. 3 strategies. You only get in the Aussie dollar Swiss once. I'm long the Aussie dollar Swiss. I'm not 3 times long the Aussie dollar Swiss, am I? I've got 4 positions on it, but off of one strategy. Oryx, is it normal for it to open 2 positions each time? Yes. Stock index hedge strategy, yeah. Again, I will say this only once. Go and watch the video. Go and read the manual. Everything is explained about the strategy in intricate detail in the video and in the manual. That's why I spend hours and hours and hours putting manuals and things together. It's internet again. This might be the MQL5 website, might be having a funny 5 minutes. Like MQL5's down. Probably come up with the maintenance page in a minute. Anyway. But yeah, when MQL5's back up, go and read the manual. It's there. All explained how it works. Sorry, Lippy, yeah. So the second part of your question, because I noticed that on some days, example Friday, when multiple currencies move, it's hard to stop taking too many trades when you don't have a big account. Yeah, you only trade once. If you're long on the Aussie Swiss, you're long on the Aussie Swiss, right? Why you got long on the Aussie Swiss it doesn't matter, is it? It's irrelevant. Yeah, if you go in hit that button and go buy Aussie Swiss. And then you go into a Telegram group and someone says, I'm thinking of taking a trade. Or I've just gone long Aussie Swiss. You won't say, I've gone long Aussie Swiss on the ADR strategy, on this strategy, on that strategy. You can say it meets 3 different strategy criteria, but you only hit the button once, don't you? You're long. That's it. Now I'm waiting for it to come out. If this goes down for the next 2 weeks, I'm still long. And I will be long until I'm not long anymore. And I won't be long anymore when it gets above that green line and I get out. When that is green and it goes down to there, I'm no longer long on the Aussie Swiss. I will remain long on the Aussie Swiss for as long as it takes. I got into the Aussie Swiss here. Yeah, I sat sideways in the Aussie Swiss for 7 days and I had a second position. And then the Swiss franc rallied off the back of the worry on Friday. So I've entered another long. But I've been long on the Aussie Swiss since the 3rd of October. I'm going to stay long on it. But why I got long, I can't even remember. I know why I got long. I got long because it's an H1 RSI extension. But it doesn't matter, does it? I got long beginning of October. Why I got long is irrelevant. Why I got long, even if it is, let's say, for example, I went long on the Aussie Swiss here because I was expecting a massive weakness in the Swiss franc. Let's say at some point here, the news changed and there was no chance of any weakness in the Swiss franc. That doesn't change one fact. I'm long Aussie Swiss. Regardless of whether the fundamentals have changed or not, that's my position. So I've got to deal with my position, and I'll get out of my position by position trading it. Yeah. When you hit the button, you hit the button. It'll either go up or it'll go down. Can't do anything else. So limit the exposure. Yeah, that's all covered in the bootcamp in intricate detail. Sorry, I'm going on about this morning, but I've had, as I said in the first part of the stream, I've had this weekend, I've had more questions. I'm not going to call them stupid questions. I'm going to call them questions I don't seem to have answers for, or questions which are answered in detail in my content that people just can't be bothered to watch. I'm not saying I'm not having a go at you here, Lippy. I'm not saying this is what you're doing, but everything is explained in very, very, very fine detail because it needs to be. It's important. But yeah, exposure is absolutely key. This is why the Trade Manager dashboard has this. You need to know which way you're exposed and you need to know how exposed you are. Right now, I'm papping myself about this New Zealand rate overnight because I've got too much exposure on and not enough of it is where I want it to be. So I should be looking to get flat on as much of this New Zealand as I can today because I've got a lot of it on and I need to reduce some. AZ missed out on a beautiful reversal on New Zealand dollar Swiss because of the do not trade hours. Yeah. Never mind. Is all I can say to that. The next time that happens to you, you'll be looking at it going, I didn't take that trade, and it goes against you for 4 ADR over a period of 3 weeks, and you're going, oh, I wish I had have taken that off. Swings and roundabouts, isn't it? You're going, oh, missed that because of my settings. If it had done that, you'd be going, haha, missed it because of my settings. Can't win. You can never win. Peter, I have done it, and it was a car crash. You're talking about using all strategies, yeah. 4 strategies, first 3 weeks booming, and in the second weeks took all the profits and been in massive drawdown. Haven't slept for a few nights, so closed it all. Yeah. It's this is the thing, yeah. If you're gonna trade multiple strategies, they've got to be diverse. So if you're trading, so I trade 3 strategies. I've got 3 main strategies. I trade 4 strategies. I trade. One of them isn't running at the moment. Hasn't been running for a year or so. But 3 main strategies: H1M5 position trading, yeah, hedging or opening range breakout strategy, variation of, yeah, that's scalping short term, and support resistance bounce. Yeah, those are the 3 strategies. The support resistance bounce is 100% discretionary. I basically open up charts and I go, like the look of that, take it. Yeah, it's not really a strategy. It's like I said this morning on the DAX. It's like, this looks like a good level to buy the DAX. Yeah. So I'll be looking at it going, that's a support level. Looks like they're starting to buy it. I'll place a pending order up there. If that goes, brilliant. I'll take it. Yeah. But I do this on the hourly chart. But there's three completely different strategies. One is an intraday scalping strategy. One is a long-term position trading strategy. The other one is a discretionary hourly strategy, which I'm usually in and out of same day or within a day or two. Yeah, but they are three different strategies. One is a support bounce, one is mean reversion, one is breakout. So it doesn't matter what the market's doing. One of the strategies will usually have some kind of edge which will play out. If the markets are really, really quiet, the support resistance, I'd just get chopped to pieces and die. If the market's really, really quiet, position trading just sits there and doesn't make any money. Regardless of what happens with those two, the stock indexes move at 8 a.m. and 2:30 p.m. in the UK every day without fail and have massive moves like we're seeing on the screen on the DAX. So it doesn't matter. If the other two aren't making money, this one is. If this one's having a horrible, choppy time, I wait for the other two to make money. Yeah. So you've got to diversify. If you're position trading 4 strategies and there's a squeeze, all 4 of them are going to get squeezed, because the whole purpose of position trading is we wait for price to bounce. If price doesn't bounce, you get squeezed 4 times harder, as Peter found out. Yeah. But equally, if you have no squeezes for a period of 2 to 3 months, you will treble your account balance. Yeah, but this is trading. It's all about risk. So there's always ways to make absolute fortunes in this. You can flip a coin now on oil and hit the button with 50% risk of your account. And if in the next hour it ticks in your direction, you could put a break even on that and hold it and pay the mortgage off next month. Or you could lose 50% of your account within an hour. Yeah, it's all to do with risk. And this is why everybody that's got the Lamborghini trading systems where they turn 1,000 into 15,000 in 3 days, they can't sustain that. All the people that sell these courses for compounding your account from $500 to $5,000 within 3 weeks, they can't sustain it because it's too much risk. You're never going to be able to do it. And the same with strategies. If you have similar strategies running on different accounts, and they all do a similar thing, i.e. they're all mean reversion strategies. If the market is not mean reverting and it's squeezing in a trend, none of them will make money. However, if you have a trend strategy running with a mean reversion strategy, if the market goes into a trend, the mean reversion goes into drawdown, the trend strategy goes into profit. Assuming you took the trend trade in the right direction, that is, of course. But just, diversification is key and exposure is key. This account I've got running on in here is exposed higher than I teach in the bootcamp, but with less than 50% of the risk. So I use 0.25% risk on the market reverse alerts EA on a normal exposure. This is using 0.1% risk on double the exposure. So my actual risk is 0.2% roughly, instead of 0.25, but I'm trading every instrument. It's just a different way of looking at exposure. But the danger of this is the exposure will exponentially increase as the squeezes go on, because if you're using a lot multiplier as I am, you're ever so slightly increasing your positions as the market moves against you. That will happen twice as fast if the New Zealand dollar suddenly tanks, because it will drag the Australian dollar with it. So you've got to keep on top of the exposure, which is why I'm saying I've got New Zealand Swiss and New Zealand CAD there. I can close that, put those down there. Aussie dollar Swiss, I can close that, put that down there. I'm not going to touch oil because it's not New Zealand or Aussie based. But that is going to increase this to something like 5.9% or 6.1%. But it's going to reduce the rate of drawdown if I have a negative result overnight with the New Zealand dollar. And I'm banking money. And I can use all of this right now. I could walk away. This 5%, I can just say, get rid of it. Walk away with profit. you just got to keep on top of everything, basically, was what I'm trying to say. But not get too exposed on the same strategy, same type of strategy. DAX is out the lows. So you're watching last week's low now on the DAX, which is here. This black line there. There's your next support. This whole area, basically, with this propulsion gap. So ADR, from that black line to ADR, anywhere in there today, you're going to find there's resistance against going lower. So there's going to be support in there. There's going to be bias in that area if we get there. This whole zone here. So if you want to take a decent stop loss based trade today, yeah, this is, as I say, the support resistance strategy I uses a stop loss. I'm stopped out all the time on it. That is exactly the type of trade I'll take. I'll watch it in here and I'll wait for a reversal alert on the lower time frame like M5. And as soon as I get a reverse alert on it, get in, stop loss way out the way down here somewhere. You know, even I wouldn't probably put it that far, but somewhere like that. Into there, something like that. Looking for 1.5R, 2R, bounce back up. Very simple, totally discretionary, no system involved. It either will or it won't. And if it does, brilliant. If it doesn't, out. But stop losses, obviously, you need to keep stop losses as far as possible. Remember, 58% of the time we stay within ADR. Yeah. So if your stop loss on any strategy used with a stop loss is at least half an ADR, it's unlikely you're going to get stopped out, because by the time you're getting into a trade, the market has already moved a fair distance. So if you're taking trades when it's already extended, if you put your stop sort of half an ADR, it's going to have to be a pretty heavy day to get anywhere near your stop loss. It might just flip-flop around and then come and get you tomorrow. But if you do get that bounce, you can easily protect that. And off you go from there. So it's totally discretionary, you know. It's just, yeah, but it's a totally different strategy to position trading. It's a totally different strategy to 5-minute scalping. Diversification. Peter, but I learned the hard way. I've lost, don't regret, because now I have my own experience. Exactly. You were there. I can't even see it. And that is where you get bounced back. And that is often your eureka moment. The eureka moment I've got on here, it's not really a eureka moment. It's a realization of how this thing works. And it can be many realizations. There's three main realizations I think people have. The first eureka moment is, you can't control, there's nothing really that shows me where this goes. It's random. That's the first eureka moment. It's like, okay, so I don't need to start hunting for that strategy anymore, do I? Because there isn't a strategy that can forecast the future. That's the first eureka moment. The second eureka moment most people get is when they've got a strategy and they understand how the market moves and they start to make money or become break even. The second eureka moment is that this market can go much further and harder than you could ever imagine at any time. So when the market has pushed for 17 days solid in one direction, you go, there's no way it's going further. Day 23, you're going, what? It's never done this before. We had that last month, didn't we? Pound US dollar. It's never done this before. It will do what it wants. Yeah. The market hasn't got any clue about any indicator on your chart. It doesn't know your positions. It doesn't care what, you could have 15 indicators on your chart. Market couldn't give a monkeys. The market's going to go where the market's going to go. We got a war kicking off. Everybody buy the Swiss franc. Oh my God, it's got 175% of ADR. Yep. And it can go another 175% on Monday. Because it needs to, it wants to. That's the second eureka moment. Third eureka moment is when you've blown an account. Everybody's done it. And you suddenly realize that, yeah, this is real. And that is where you put kind of the three of them together here, I think, is where you suddenly get up to here. Because every single one of those eureka moments, you think you've cracked it, and that gets you to this stage, the walking on water, where you're like, I get it. And then I didn't get that bit. Yeah. And there's not many of those I didn't get that bits. Yeah. Black swan events are another one. They're so unbelievably rare. But unless you've lived through a black swan event, you don't think it'll ever happen to you. It does. But very, 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 very rarely, and less so these days because we're more algorithmic. It takes a big world event, yeah, to make that happen. COVID, for example. So that's where Peter was, and suddenly found the eureka moment. I get this, but I've now learned another thing which topples you back to there. Eventually, what you'll do is you'll get to that stage and you just jump step 4, because everything in step 4 that knocks you back is done and you won't do it again. And it's the only way to learn is to experience. I can teach theory until it's coming out my backside, but theory is only theory until you've experienced it, which is why I say to everybody, get in the strategy tester. Watch this thing go past. If you need any more like proof that the market moves in cycles, yeah, and this isn't proof enough for you, go and watch this in the strategy tester and watch 10 years worth of this fly past very, very quickly, and you will prove it to yourself over and over and over again. You have to have this knowledge to know that when this gets down to here, it's highly likely it's going to do that. But you will also have points where you've got in there and you've seen these fly past in the strategy tester and it's done that. And you're like, wow, that would have blown my account. It would have done, yes. So you needed to close that position out, but you wouldn't have done it because you were always anticipating it coming back up. Yeah, which is why sometimes I get out of stuff with a 7-10% loss, as I did in August or September. And just go, I've got to cut because I've seen it. Not just cut, I've seen it blow. And I've done it. I've blown accounts. Obviously, everybody's blown accounts. But experiencing it is a very different lesson to learning it, and it's a good lesson because you won't do it again. God, this is a bit of a deep session today, isn't it? Anyway, so yeah, I haven't really got anything else to cover this morning. Waiting on the DAX, basically. For potential bounce down here somewhere, but I'm not going to trade the DAX this morning. I missed the trade this morning, unfortunately. It would have been a beauty, but meh. All indices coming down so far. Dow not as much as the S&P and the NASDAQ, but they are all coming down. So we've got a fairly big pre-market range to get into this afternoon. So we'll have a look at this when I come back at 2:20. Has anybody got any other pairs they want to look at today? I've kind of covered most stuff that everybody should really be in, I think. Can you look in the TG later? I think there's a bug in the SIH with the risk settings. Can I look in the Telegram later? What? Oh, yeah. Okay. Yeah, you know that risk. It's not a bug, Robert. I just read it quickly. Obviously, it takes 2 trades. So you need to half whatever you want to risk. If you want to risk 1%, you'd need to put 0.5 in. Otherwise, it would take 1%. It's per trade. It takes 2 trades. And it's based on the range, not the... yeah, so basically, it doesn't use the offset. Yeah. So you need to take the offset off of it as well. It's rough. It's not exact, but it's rough. Not exact. So roughly that, because of the one of the main things is anyway, there's no bug, I promise you. I've tested it to death. But it isn't exact, unfortunately, because of the offsets. So what it doesn't take into account, so the way it works is, let's say, for example, that was the range. there, and there. That is what the risk is calculated on, basically. It's not a bug, it's a feature, as Satan's flip-flop says, yeah. I'm going to use that more often. If you set an offset there, that's not included in that. So the range is what it calculates your risk off of. So I've tested it, and it's pretty much right. I'll have a look. I'll have a read. Do you trade the FTSE? No, I don't have the FTSE. I have traded the FTSE, but it's I didn't do very well on it. But it doesn't mean it doesn't work. So, I just don't have it on Robo Forex. So I was trading on prop on Thunder Pro, and had a really good week on all the indices apart from the FTSE, which wiped it out. But that doesn't mean it doesn't work on the FTSE. It means that week was bad for the FTSE. So anyway. Gold. We can have a look at gold before I go. So gold basically obviously this is a US dollar cross. So the trouble with obviously gold is we get these weird rallies that come out of nowhere. So I think this was about 225 ADR or it's more than that, wasn't it? 673, 300% of ADR basically on Friday. Gold obviously is again, another safe haven, a much less reliable one now that Russia has an import-export ban, because Russia's got a very big gold holding, and typically, obviously, you would be able to buy and sell Russian gold. You can't now because there's an import-export ban. So it's a lot more constricted in its movement now, and a lot more related to what the US dollar is doing. So if the US dollar goes up, gold goes down. If US dollar goes down, gold goes up, because it's just a cross. So if that's going down, that's going up. But we had a very big buy order come in on Friday, which I suspect again is a run to the hills, run to safe haven, money being put in safe places. So as with the Swiss franc, there's a good chance that this could get completely undone today. We're already at ADR, pretty much. We're just shy of ADR, look, already today. So watch this area down here. But again, it's a US dollar cross. So you've got to just bear in mind whatever happens to the US dollar is going to affect this. But at the moment, you got a whacking great gap fill and potentially a complete run back out of gold. So I'd be looking for shorts today than longs. But I don't know. I don't trade it because it's too volatile. Yeah. Look at the speed of that move. Yeah. I mean, it's one of those currencies where you get these stupid moves. Yeah. Look at these news specifically. Yeah. Much bigger effect on gold news events than it is on FX. For position trading, what I found when I was position trading, I haven't position traded it for 3 years or so. I've had the odd trade on it every now and again, but not position trading. If you get it wrong, it will very quickly get you into drawdown, and it's very difficult to recover, because with position trading, your goal is to try and keep an average close enough for a good news event or a good day to just get you out of that position. So we're trying to keep our average roughly within ADR, 1.5 ADR, something like that, so that we can get an exit very quickly on a day, which is a mean reversion day. The problem with this is if you get in there, by the time you take a second position, it could have moved to ADR, which means you've got to get an entire 1 ADR move just to get back to break even on it. And it's days like this that cause those problems, which is why I chose not to position trade it. What I found was I went into drawdown very quick, and exits were very long-winded. And it's similar to oil. Oil is very similar. Oil can have these sorts of movements as well, because it's a supply and demand driven product. It's a tangible product. FX is not tangible. It's not real. It's just an exchange rate between two things. Gold is, you can pick it up. Yeah. Gold. This is real gold with real diamonds encrusted in it. It cost me $7.99 from Amazon. I don't know why they're selling it so cheap, but it's a real thing. Same as oil. Yeah. So when you've got a tangible supply demand driven product, they can have very, very fast, sharp moves when the fundamentals shift on them, or something causes it. You'll find the same thing happened if you go back and look at COVID. Year are we in? 2022, miles away. My God, COVID was a long time ago, wasn't it? Seems like yesterday. Nearly there. Okay, March 2020. So you get these obviously massive, massive, massive moves, which are very fast, very hard. And it, like this sort of thing here as well. And it's very difficult to recover from. And it shifts a lot as well. Look, I mean, look at that. That whole move there. What the hell was that? August 2020. 18,000 or nearly 19,000 off of an ADR of 224 in a week and a bit. It goes nuts for no reason. Yeah, if you're position trading it and you get something like that, it's just an account killer. So it's just not worth it. But intraday, loads of movement. Beautiful intraday thing to trade. But again, you're just reliant on US dollar movement, aren't you? So it's just the US dollar cross. Quick question. What is the app you use that you can export all the data to and gives you all the analytics of the trades pairs? Quant Analyzer. So it's made by Strategy Quant. It's a forum. It's free, basic. Oh no, that's Strategy Quant. Sorry, Quant Analyzer. It's free. There is a pro version. You don't need it. The free version does everything you need. It's really for analyzing strategies. So for analyzing automated strategies, basically, there's the bounce starting on the DAX potentially. But it's a fantastic tool for analyzing performance as well, for a free one. But obviously, there's loads of better ones like EdgeWonk and stuff. There's tons and tons of things you can use to analyze your trading. But I mean, putting your trades on the chart, having them plotted on the chart is, as good as anything. It doesn't obviously give you numbers, but it shows you where you're going right and where you're going wrong. So if you're looking for something to correct mistakes, just visually looking at your trades is the best thing to do. If you're looking for something to analyze where performance holes are, Quant Analyzer will do that. Good bit of kit. Right, I'm going to leave it there today. I'll be back this afternoon at 2:20, and we will trade the New York session. Oil's dropping. And see basically where we go this afternoon. News-wise today, be careful of Empire State at 1:30. Probably not going to do a lot. Sometimes it does, sometimes it doesn't. But manufacturing isn't the big thing for the US, so it's one of the weaker news events. So we should hopefully have a decent afternoon this afternoon, as long as nothing kicks off. So keep your eyes peeled on financial juice. Iran, Hamas told us they're strong on their own and they don't need any help. Blimey. Yeah, so just keep your eyes peeled on this. This, when we had everything kicking off with Russia and Ukraine, every time Putin opened his mouth, literally, the stock markets collapsed. we're not at that stage with this at the moment. It's not having anywhere near as much impact as the Russia-Ukraine issue, but it has the potential at any moment to just suddenly move the markets, as we saw on Friday. So it only takes one massive power to suddenly get involved in it, and it shifts the entire situation. So, and that will mean that the market will just panic. And when the market panics, it tends to sell everything off. So just, you got to be very, very careful at the minute, just in case. So watch things. Best thing to do is to watch your P&L, because that's the first clue you're going to get to anything happening, because by the time you've actually seen what the reason for the move was, the move is over. So if you suddenly see your P&L going nuts, you just want to be careful. Yeah. In either way as well, obviously make sure you take it off. Yeah, market can move in your favor as fast as it can move against you, don't forget. So it's not always bad news. Yeah. I was short in the DAX when Putin started opening his mouth, and I made an absolute fortune on a short, because he tanked the DAX by 150% by opening his mouth in literally 10 minutes. It was like, thank you very much, Mr. Putin. But equally, you can get stopped out and slipped beyond normal levels at the same time. So, okay, that's it. I will leave it there. Which prop company is better to choose from your list? There isn't one. The whole point of the list is you choose, not me. What's important to you in prop? For Belarus, I don't know. I don't live there. Doesn't matter where you are in the world. They all take everybody from all over the world. All they're doing is they're selling you demo accounts. So it doesn't matter where you live. I don't know. Do some research. That's what the filter system's for, is to filter it down to what is important for you. However, I would say at the moment, any prop firm is as dangerous as the one next to it, because we know what's going on with my Forex funds. So, yeah, if you're blocked by FTMO, don't use them. I don't know. Go and try and sign up if they have limitations. I've never had a prop firm or a broker that hasn't accepted me, because I'm in the UK. Everybody accepts everybody from the UK. But I know there's a lot of countries that aren't allowed in specific brokers and things, so you just got to try. These are all good, and I use that in inverted commas now, because I thought my Forex funds were good. As far as I was concerned, I was doing very well. They were paying me lots of money. Everything was going brilliantly, and then the rug got pulled out from under their feet, didn't it? So these are all great at the moment, but this afternoon, CFTC could investigate EA, and EA could go pop and disappear. Don't know. The whole industry's in turmoil at the moment. It's all blowing over. Everyone's starting to forget about it. But then all of a sudden another one will get killed, and everyone will remember it very quickly. Euro Swiss ADR has been hit and bounced. DAX target for today. We've hit it. I don't know what do you mean target for today? You haven't told me which way you're trading. Upside, ADR. Downside, last week's low and that propulsion gap. ADR. That was the target today. Yes, we've already hit target today to the downside. If you took the opening range break today, you've already hit target. You're out. If you're buying it, watch that level. Watch that level. Lows and highs, yeah? Always, always, always lows and highs. The market moves from support to resistance, from resistance to support, yeah? Yeah, we push down, we break, we retest. We push down, we break, we retest. We push down, we break, we retest. We smash through, we reject. One of those things happens at support and resistance. So if the market needs to go somewhere to the upside, it'll go there, and it'll see if it can get through there. If it can't get through there, it will come back down again. If it can, it will go through it. And then it will look for the next level, and then the next level, then the next level. And if it gets up to here, it'll probably get exhausted because it's done all of its movement for the day. I don't know. It'll go where it goes. All I can show you is what's on the chart. You can see that. Up. Depends where you got in. If you got in there and you got a stop loss there, that's a good target because that's more than your stop loss. Take it. Yeah, if you want to be brave, try and get up into that propulsion gap. But if you look at it, it's come down for 2 days. It's very much due a retracement, isn't it? So I think there's a good chance of a decent update today, sort of up into ADR, but I don't know. Pick where you want. Right, I will leave it there. I'm going to have a look at this thing in Telegram at some point today, if I can. Anything else you need, let me know. I'll be in Telegram. Other than that, I'll be back this afternoon at 2:20. Hopefully the internet will hold up this afternoon. We'll have a look at FX market again, have a look at the indices, and back tomorrow morning at 7:50 for the Frankfurt session if you can't make it this afternoon. All right, so have a good day. Anything you need, let me know. Oh, afternoon, Franco. You didn't even say hello. He's just saying goodbye with a beer. It's a bit early for a beer here. It's like 9:30 in the morning. Have a good evening, morning, wherever you are, and I will see you in the next one. Have a good one.